lunch. If you've got a job, then it's not plain sailing, unfortunately. Even though you're getting money every single month, that money is diminishing in real terms anyway. We've had a discussion about this earlier on in the week on Power Lunch, but here's a new survey that says it's more or less exactly the same thing. Larger numbers on your payslip, it says, less money in your bank account and a greater temptation to rely on credit for general expenses. That is what the latest BankservAfrica Disposable Salary Index, the BDSI, has revealed. In the Power Lunch Johannesburg studio is Mike Schussler, Chief Economist at economist.co.za, to discuss this. Tough enough getting a job, Mike, but when you do get a job, your money just decreases every month, apparently.
Well, it increases, but obviously lower than the inflation rate when you're looking at your money paid into the bank. And this is a rather large survey because, in a sense, it's a real time payments that people see in their banks, that is between banks, and that's about 3 million people in this survey on a monthly equivalent basis. And if you look at that, we know that the average person in South Africa for the last quarter got about 10,338 Rand into his bank from his employer, and that's up only just over 5% on a year ago, and that's below the rate of inflation, although we've got indications from the previous quarter's quarterly employment survey from Stats South Africa that average salaries, gross salaries, increased with more than 8%. And that shows you that while gross salaries are increasing, the fact is disposable salaries are not, and that's because the deductions such as taxes and so on that get taken off at the firm level are increasing much quicker than people's salaries.
So despite the fact that we've got inflation, let's call it 6%, but we're getting 8% increases, everyone says, well, that's fantastic. And some people like myself say, why should we be getting salary increases above inflation? It doesn't work out. But what you're saying is that the devil is in the detail, and in fact, maybe salaries should be going up more than 8%.
Well, that's right. You know, it's not that salaries should be going up, but the fact is that when the state gives you off on taxes, they're not really giving you off. They're saying, right, we're decreasing taxes with, say, 5 million, but it's on 210 or 5 billion, and on 210 billion, it's only 2.5%. So you've got bracket creep. So the higher your salary goes, the more in taxes you pay. So we see personal income tax grow roughly 10% a year, and it's virtually doubling every 7 years. And your salary's going up with 8% a year. You're not getting the same sort of stuff because those deductions are just getting bigger, and that's the one part that people have got to understand. Then also just saying that average salaries, I understand that average salaries are an average, and only about a third of employees get that sort of salary or more. The rest, your more typical salary that people get in the bank account is closer to 6,500 Rand. And that gives one a good idea. And then we've also got a pension index at the moment, which shows you that the average pensioner is only getting about 4,800 out. And again, the same applies. A more typical pensioner gets out between 3,000 and 4,000 Rand. And only a third of pensioners get 4,800 Rand or more out a month. So, you know, if you look at South Africans, we don't know what that's grown with because that's a newer index and we haven't got that data so cleanly backwards, but we will shortly. But there's certainly a trend in slowing disposable salaries. The growth is slowing. And I think we're going to be in probably quite a hard time in salary negotiations because what the employee sees in the bank and what the employee feels that what they've got in gross salaries are two different things.
Yeah, I think you bring up the wage negotiation season, which is coming up certainly in certain industries in South Africa, and when the unions, who watch this show every day, of course, they're going to say to themselves, well, Mr. Schussler said this when they sit around the table, and so therefore we should get more than we actually have asked for in the first place, because the economics of a person's salary is laid bare here by this report.
Well, it says to you the big winner of salary increases is perhaps the state taxes. Pravin Gordhan is probably smiling every time the unions ask for 8 or 9% because he's going to get more and more of us in higher tax brackets and he's going to make more money out of that. And I think that's the one thing, but it's par for the course. I think the other thing is that we've got to realize is that things like medical aid are also going up because, medical inflation is typically higher than your average inflation, so that's going to increase quicker, and that also gets deducted at firm level. So I think everybody in South Africa at the moment is under pressure, even if you have a job. But I don't think it's something to say you should necessarily get a higher salary or not on this. It's just very interesting to note that the higher salaries and higher than inflation salaries increases that firms are having to pay do not translate into disposable salary increases of the same nature. And I think that's the one thing. And the other thing is that people on pensions are only getting about 46% of what people get on a salary. So, the lower interest rates are certainly harming, if you wish, a certain sector of our population that's a bit older, and it's very difficult for them to make up. And it says that probably people haven't saved enough. And that's another aspect that we've now discovered. And these are hard facts. These are things that we get from a system. This is the actual money being paid into people's accounts. We've distinguished now between pensions and salaries. We're fairly happy with salaries. We're 99% there with pensions. We've got a very good idea what's going on in that market. So this is new information, I think, that we didn't have before, because what we had before was we got a formal sector survey from Statistics South Africa. Now we've got, it's also formal sector, but we've got the disposable salary, not just the gross salary. And what it also says to us is that...
Let's talk about, before you go on, Mike, before you go on, let's talk about the implications now, because we're going to be speaking to David Neal, the CEO of Clicks, in about 10 minutes' time about this. He's a retailer that has said in his post-results commentary that there's a tough environment out there, and companies like Clicks will be looking at this and saying, well, less disposable income, so therefore less people are through the stores, and our profits are going to fall. And at the national level, never mind the corporate level, at the national level, also it's going to have implications, isn't it?
Well, absolutely. I don't think there's going to be great retail sale figures coming out this year. I think what it says to us that retail sales are likely to be below inflation unless the consumer borrows more money. And I think the consumer is a bit shell-shocked. There may be some people that borrow in the short term, but I think the long-term nature of everything now is going to be retail sales down. I don't see big employment growth at the moment, but even all things being equal, no employment reduction and no increases, it says to me sales growth in retail is not going to happen this year. And it's not just the retail sales, you've got to look at it broader, because people don't only spend in shops, they spend on airline tickets, they spend on bus tickets, they spend on houses and all that type of stuff. I think that's going to remain majorly under pressure. If you go and look at the housing market in South Africa at the moment, it says to you quite simply, we're selling 40% of the houses we did during the high point, or about a third of that, and we're only at about 50% of the normal sales that we had over the last 2 decades. So it's already impacted there. It's now spreading that impact because people are not getting that sort of money where they have a disposable income to spend on other things. And I really think this gives us a very good idea as to what's happening with disposable income of people that are employed and people on pensions. And we know that those are not increasing quicker than the inflation rate. We suspect that is the case with pensions. We'll know next quarter. But we know with salaries, they are not getting above inflation increases out.